Ladies and gentlemen, welcome back to the StockCharts studio here in Redmond, Washington. My name is Grayson Roze, Chief Strategist here at StockCharts.com. Thrilled to be with you as always for, quite a wild ride that we're being sent on here in the markets. We are going to unpack all of the action. We're going to talk about exactly what has got our attention today. And I have a fantastic guest on the show with me today to unpack everything that is happening. Julius de Kempenaer, Mr. RRG, creator of RRG Charts. How are you across the pond? You made a long trip out.
I did make a long trip out, and it's very interesting because you get on a plane and markets look quiet, and you land, and all of a sudden, whatever erupted.
A little bit of a different situation here.
Yeah, and even while I'm here, I go to bed. So we talked about like what are we going to talk about tomorrow? It's sort of a game plan laid out. You go to bed and you wake up, it's like, oh, that plan is out of the window.
A little bit different.
It'll be an interesting chat that we're going to have here.
I know. I've got this thing called a pad of paper here. I wrote down some notes, and they are all being thrown out the window for the show today, so that feels really good. The only good news is we imported you from Europe, and no tariff on you. So you arrived here, cost-free.
We are very good friends, and we love to make deals. So so there you go. I'm pretty sure we'll get some tariffs.
There you go. Well, we are going to talk about a couple of things today. We're going to basically hit three different topics. We're going to talk about pain points in this market, things that Julius and I are watching. They give us pause, give us concern, anything that we are worried about. We're going to talk about bright spots in this market. We're going to hit a couple of things that we are excited about, things that are giving us a little bit of hope out there in the grim market that we have here today. And then we're going to talk about how we're kind of navigating all of this, tools that we're using, things that we're relying on right now to make our way through this market. So three topics. We're going to go bang, bang, bang through them. Keep this short and sweet. I want to kick it over to you to start. Like I said, pain points is going to be our first topic. So what are you worried about right now when you sift through all of your charts, when you think about what's happening out there? What's caught your eye? What's sticking out to you on the downside? What are you most worried about?
One word.
Okay.
Volatility.
Volatility.
Investors, traders, in general, don't like volatility.
Nope.
And that is, if there is one thing that we're seeing over the last, especially the last 2 days, but certainly over the last 2 weeks, is a huge increase in volatility.
Massive.
And that there's been a few tweets out there and posts of people annotating charts saying like, hey, this jump of VIX above 50 happened only, I think it was 3 times before, and you had a huge rally after that.
Right.
I did look into that a little bit, and in general, it's true. I mean, after such a huge spike, you get a bit of a rally. You get a rally because if you look at long-term charts, you got huge spikes in VIX, and the VIX comes down, and usually coincides with a nice rally in the market. The problem is that the spike in VIX not necessarily coincides with the bottom in the market. So although this might be a signal that could have some positive tune to it, I think we're still not there. We still need to figure out if we have really seen the bottom. And to be honest, I am not sure about that.
I would agree with you. I'm inclined to agree with you there. I mean, that spike in volatility has been absolutely something to watch. I think it's accompanied by a spike in just insane uncertainty. I mean, that's kind of what that represents, right? So that's kind of my first pain point in this market is just heightened uncertainty. No one knows what the heck is happening. Today is a great example of that, right? We have a market that looks very different in the sort of later in the session than it did at the start of the session. And all of that is driven by uncertainty around tariffs. We got the announcement about the pause, which has now shot markets higher. But there's no guarantee that pause is going to last. There's no guarantee that things aren't going to change a day from now, 2 days from now, 2 weeks from now, whatever it might be. So there is still massive, massive, massive uncertainty in this market. A ton of volatility, like you said, with the VIX up there at such elevated levels. That is a pain point for me. Absolutely.
Yeah. The interesting part of it is that financial market regulations over the years have come to an agreement that market impacting messages like earnings announcements, hold trading. If a company has a big announcement, they either do it before market open or after market close, and if it happens during the market, the trading in that stock halts for that reason. And now we're confronted with the situation that we can get any type seriously market impacting message during market hours. Because
At
if you
any
look
time
at
of day.
today's market, I mean,
Yeah.
today the market, like, we opened a little lower and we drifted sideways, and
Yeah.
then I think it was around noon or 1 p.m. Eastern.
Right.
That message comes out, and then we got that huge rally. I mean,
Shoot
it's like,
fire.
so I mean, we're joking about it, like, 10 years ago, I mean, oh, well, not even 2 years ago, you had fundamental analysis, you had technical analysis, and now we also have Trump analysis, because you really need to read what's going on and get a hook and get a handle
Yeah.
on what comes out of it. And it causes volatility, it causes uncertainty. Right now, it looks as if people like it because the bad news is put on the back burner,
Sure.
but we don't know whether, I think you said it, just like the pause might be on pause.
Yeah,
And we
you don't know.
and so we don't know. And that is, I mean, it looks really nice now. We're up, 5 to 10% across the different
Right.
indices and the different sectors. Who knows what it'll be tomorrow?
Right.
So,
A lot of uncertainty, a lot of volatility. If you're thinking about the charts, anything that catches your eye, again, in this topic of kind of pain points, anything that stands out to you that you're concerned about, anything that you want to pull up?
well, we're still talking about pain points, right?
Sure.
So the pain points are that a lot of charts have been damaged seriously.
Serious damage.
Look at SPY, look at many of the sectors, double tops, head and shoulders, few things that come to mind that have been broken.
Yep.
And so that is definitely a pain point. And even if we're grinding to a halt in this decline,
Yeah.
I believe it'll take some time for the market to digest
Right.
that negative impact before we can resume the uptrend. So that is still, I still see that as a pain point.
Yeah.
If you forget about all the announcements that we had, and maybe the announcements that will be coming, if you just look at the charts, and I prefer the weeklies because with all that volatility, the weekly chart gives you a little bit more
Yeah.
quiet.
Right. Moves it out a little bit.
You will see a lot of broken support levels, broken trend lines, completed top formation. So across the board, that is still a concern, I think. Yeah.
Absolutely. Yeah, I want to pull up a couple of charts here because we want to give a little bit of context to this conversation. For me, one of the big pain points right now when I look at the charts, when I dig through everything that's happening, is breadth. Breadth is just absolutely about as gross as you can find. So if we flip over to something like a chart here of advancers and decliners on the NYSE, what we can see is this big pile of declining days. We've just had huge percentages of stocks in major indexes, major groups like the NYSE, declining on the day. So this is huge pockets of declining stocks. This is just not something that is strong at all. Now today, of course, we're seeing this massive pop, and so we're getting a big spike in advancing stocks. But that's something that has been non-existent, especially for the last couple of sessions. We've seen huge numbers of declining stocks. So breadth is just absolutely weak to me. This is measuring percentage of stocks above key moving averages. So we have the 20, we have the 50, we have the 100, and we have the 200-day moving average. Again, we're kind of staying focused here on the NYSE. We can see that for all of those breadth measures, not a lot of stocks above any of those key moving averages.
No.
This is about as weak as these numbers get. Very weak breadth numbers here. We can also look at something like bullish percent indexes. So this is measuring the percentage of stocks in these different groups that we can look at on a PNF buy signal. And again, we've seen these BPIs just absolutely fall off a cliff. So this is across a number of indexes. Here we have the NYSE, we have the NASDAQ 100, the S&P indexes as well. And all of these BPIs have just fallen off a cliff to very low levels. We don't have a lot of stocks that are on a PNF buy signal. The new lows list as well is something that stands out to me. So this is a huge spike in stocks making new lows. Now, obviously, we're unwinding a little bit of that today with the big pop in the markets, but it's undoubted that this huge spike in the number of stocks making new lows is something that absolutely stands out to me. So across the board, to me, breadth has just been absolutely about as weak as you can see. That is a huge pain point for this market, and something that definitely stands out.
Yeah, I totally agree. Especially also when you look back in history to those spikes.
Yeah.
Also the chart of the key moving averages,
Right.
stocks above, below the key moving averages. If you look at the history, it has been a while that we have been at such low levels for these
a
indices.
long-term
Like,
chart, yeah.
yeah, there you go. So
I mean, this gives you a sense of how kind of extreme this is.
exactly.
Now, some of these indexes we haven't actually had for quite as long as the others, but you can see. I mean, these on percentage of stocks above the 200-day moving average. We don't see numbers this low very often.
Exactly.
It's pretty
Yeah.
pretty rare. Same thing with the 50s. Yeah.
So, yeah. So the good news is that we can only go up from here. We
Exactly.
just don't know whether it's going to happen today or tomorrow.
Right, right.
That's-
There's the depth of these drawdowns and there's the
Yeah.
duration of these drawdowns.
Exactly. Yeah.
and
It
those
could
are
take a
two very
while.
different
Yeah. They
things.
can stay low for quite some time.
Right. Now, another thing that's standing out to me is what I call kind of my tactical timing charts. These are short-term charts based in a lot of ways off the work of a good friend of ours, Brian Shannon. These are short-term charts, 30-minute charts, so every bar represents 30 minutes of trading, but with a 5-day moving average on it. So that 5-day moving average is about a 65 period on the 30-minute chart. What you can use this to do is just on a very short-term kind of tactical basis, assess where the market is, what direction the market is heading. Now, again, we're seeing this huge spike. This in particular is looking at the total U.S. market. We're seeing a massive spike here in the markets, but we can see this has just been an absolute decliner of a market, just heading lower for multiple sessions in a row. And we've been well below that 5-day moving average. This is another thing that's caught my eye. It's just a pain point, below
so
the moving average like that.
If you stay on this chart for a minute,
Yeah.
so here's my dilemma with a chart like this. So
Yeah.
if I look at this, I say, hey, we've closed the gap.
That's true.
So resistance should be coming in, right? So
Right.
if you close the gap, resistance should be coming in. Everybody who forgot to sell on that day before that gap is now kind of, relieved, like, hey, I can still get out at this level.
Right.
On the other hand, it's a, what is it, a 30-minute chart?
30-minute chart.
So in terms of a 30-minute chart, it's a massive double bottom,
Yeah.
which is a hugely
Boop,
positive thing.
boop.
Okay, so how do we go about this? Those are dilemmas that I'm looking at.
Right.
And the way let me give you this, like, shooting from the hip here. So we're running into resistance. It's, what is it?
Kind of at the bottom of this range.
11,
It's been a
so
little
it's
bit of-
so 2:30
Yeah,
Eastern
yep,
that
yep,
we're
yep.
recording this.
Right.
So right now, I think we're running into resistance. I would not be surprised if we start to, roll over and,
Yeah.
and taper off and get some profit taking, pushing the markets down, and then the level of those two peaks,
Yeah.
which are basically the old resistance of that double bottom,
Right.
will start to act as support.
Right.
So I am very interested to see if the market gives back some of the gains that we saw over the last 2 hours.
Right.
What will happen, when we hit that former resistance level?
Yeah.
If we start bottoming out there and we start a new series of higher highs and higher lows, we may be in for a little bit more upside.
Right.
But still, the damage to the weekly charts has been done, and everything that we do now is, I think, very short-lived
Yeah.
analysis.
Yeah, absolutely. I want to turn to bright spots, and we're going to stay actually on some of these charts. This is a big chart list that we that I like to look at through my account. If we look at the S&P 500 here, we were looking at the total market now. Let's drill down into something that people are pretty familiar with. Different price levels and things on the S&P 500. We can see how rapid these spikes have been. To me, again, turning to bright spots in this market, turning to things that are kind of giving me a little bit of hope. This is the type of thing that does give me hope in this market. Twice now, we're seeing today a little bit more secure. We're seeing the markets rally on actual rhetoric from President Trump. Earlier in the week, though, we saw the markets absolutely spike off the lows in a very short period of time, based on rumors of a pause. Now we're actually seeing the true pause coming through, and once again we're seeing the markets absolutely rally to the upside. Huge move. That gives me a glimmer of hope, because it does tell me buyers are itching to send this thing higher. If we do get sort of a reduction in that uncertainty, if we get maybe a reduction in volatility, if we get some actual news that we can really rely on, and we sort of understand more of what's going to happen throughout the global trade moving forward, buyers want to step in and want to send this thing higher, and we're seeing that. We're seeing buyers really vote with their feet here and send this market higher. So as far as bright spots, to me, the way that buyers are stepping into this market when they have stepped into this market, that to me is a bright spot. Anything catch your eye on in this market as far as things that are giving you a little bit of hope?
Yes, and I'm not sure if we can switch to my screen.
Yeah, we should be able to. Yeah.
So this is my weekly chart of SPY that I've been tracking, and people who watch my weekly videos and read my articles will recognize this chart. A few things. The one thing that I've been watching for weeks already was that big double top in SPY.
Yeah.
Well, that executed right here. I'm not sure. This is probably somewhere back in February already. And then we had that old rising support resistance line that should start acting as support, which it did for a couple of weeks. We even saw a little back test of that break of support acting as resistance. And then and this is a Julius rule. I've never really found this in any book, but what I've noticed is that when a market comes back into an old channel, it usually reverses all the way back to the bottom of that channel. So you have a rising channel, you break out of it, usually like a blow off and an acceleration you get. Right. You work your way, and then it starts to act as support. If that support breaks, very often you will see a decline towards the bottom of the channel. Yeah. And that happened here like literally within a couple of days. Right. But what's interesting now, and we're looking for bright spots, the bright spot is that, first of all, we've touched the lower boundary of that rising channel. Yeah. And that area is coinciding with two horizontal support levels. The first one is the one that is very late in 2021, 479. And then the one that has been touched a couple of times around 460, slightly above 460. Yeah. So this area, this total area here, is an area where I am now on the lookout for double bottoms, inverted head and shoulders, some sort of bottoming characteristics. Right. And another bright spot is that this S&P chart was loaded with negative divergences for a long time. Everybody was talking about negative divergence all over the S&P. This is now being resolved. I mean, they were there. Yeah. You saw the result. So the negative divergences are gone. There are no positive divergences yet, but the negative divergences that were sort of hanging over the market as a dark cloud have now been resolved. So the combination of unwinding that overbought condition, respecting support levels so far, is like, okay, so if the market, I don't think I'd be very comfortable going all in right now. Sure. That'll be way too uncertain. But if the market calms down and continues to respect these support levels, and we see starting to see the first signs of bottoming formations, that'll be a pretty good sign for me.
Yeah. I mean, it's reasonable to look as a pure technician. You look at a chart like this, you look at a long-term weekly chart on the SPY, and you say, well, it's kind of a breakout retest, and we're watching for a bounce here. Now, I understand that we're selling off and we're retesting that breakout for some pretty insane reasons. But again, pure long-term technical analysis, a breakout, a retest of that breakout from the top, and a bounce if we can get it, that's the type of setup that I like to look for. We're seeing that potentially on the entire market. That is definitely another bright spot for me, kind of the longer-term view.
Yeah, so the problem is that we have to decide right now. But this is typically one, I tell this to people all the time. This is typically one of those situations where you got to decide now. Yeah. And if it happens, and then 6 months from now, we're sitting here and we're saying, hey, you saw that bounce? That was clear as day. You hit support, we get a little retest, we form a bottom, and we start going up. Yeah. And that's the problem. You got the TikTok technical analysts. Right. They will show you in history where it happened, but never on the right-hand side of the chart. It's always like, if this happens, then you got to do that. Yeah. And now it's happening. So what are we doing? And I am not too shy to admit that I find this super difficult, because you got to pull the trigger, and that's the hard thing. Yeah. So again, I'm a little bit more conservative, I guess. I'm not in the camp that's all in now. Sure. But I'm watching this, and I'm looking for the support area. Yeah. And if it starts forming on a daily chart, preferably, then that's good enough for me.
Yeah, you're looking for those signals. It's about adding up all of those different signals, right? It's about the weight of the evidence. It's not one individual thing. It's about putting it all together. And when that weight, eventually tips the scales in a certain direction, that's when you move.
That's why you go for it. Yeah.
Yeah. Okay, bright spots. I think we've covered a few good ones. There are other things that we can look at. I think one of the notes that I had written down was just at a certain point, things get so bad that it almost becomes a little bit of good news. We're kind of talking about that with breadth, right? Where breadth gets so weak that you kind of see these insane oversold conditions, and at a certain point, that actually becomes bullish for the markets. Just kind of the mean reversion strategy. I want to talk, though, about things that we're using to navigate through this market. What kind of tools, you're talking about your long-term weeklies. We're pulling up a couple different charts here, but what are you using to navigate through this uncertainty, this volatility right now? What's helping get you through?
Which tool do you think?
I kind of had a guess here, but
right.
I was hoping you'd bring it
So
up.
obviously it's an RRG, and I'm biased. I like it. It's a good thing. It helps a lot of people.
Yeah.
But you will never hear me say that this is like the ultimate tool and this is the only thing you need, because it isn't.
Yeah.
It's got its flaws. There is in the end of the day, it's also trend following. The good thing is that it shows you what we say, the big picture in one picture. So you get a bigger picture on one of it. And what helped me, the last few weeks, is the observation that two of the most important sectors, consumer discretionary and technology, they started moving into the lagging quadrant. They were in a negative heading into the lagging quadrant. That is about 40-45 the market capitalization, just right there.
Right.
For a little while, the offset in the other sectors was strong enough to keep S&P sort of at its levels.
Yeah.
But then it started to break down. And that situation, if you look at the weekly RRG, has not changed. We still see tech and consumer discretionary inside the lagging quadrant. This little bump right up here in tech this is a weekly RRG, but that little bump there is caused by the last 2 hours of movement because it's so big.
Right.
This could be, because a lot of people ask me that, whether it's real time or not. The answer is yes. So on a weekly RRG, that last node is fluid. So that little bump here, if something happens today or tomorrow or Friday and tech goes all the way back, you won't see that little uptick there. It will just move to where it is. So the last node is fluid, so be careful with that. The bigger picture is that tech and discretionary are still in the lagging quadrant. All the others are still moving the other way. You see financials and communication services hooking back down again. That's also the last node, so that is affected by the recent events. The big picture is that tech and discretionary are still underperforming, are still the lowest ranking sectors in the universe. No matter that 10% day to day, if it continues, we will see it and we will pick it up on the RRG. If you move that to a daily picture, then you will get a lot more granularity on these moves. And you will see that, interesting enough, tech is still on the low end and is hooking back up here. But you will also see that utilities and staples, the really defensive sectors, are inside the leading quadrant. You see energy moving out. So this is stepping back from day-to-day movements.
Yeah.
And for me, this is still in favor of more defensive rotation. Tech deep down in the lagging quadrant, consumer discretionary in lagging on the weekly, and you see it already rolling over inside the leading on the daily chart. So that bigger picture continues to keep me on my toes and be very, very careful. And combining that with the longer term chart that we just discussed, I'd like to see a little bit more confirmation of bottoming out and positive things. If I look at the RRG, that would be tech and discretionary starting to pick up, the more offensive sectors starting to put in positive rotations on the daily RRGs, and then preferably confirmed on the weeklies. A funny thing is, because just before we started this show, I looked at we can do RRGs on intraday data.
Right.
So I started looking at a 30-minute RRG, and if you do that, that's actually quite interesting to see, because this is up to now.
Yep.
And let me put in, so tech had the biggest move. So it's now up 7.8% over the last 5.5 hours. So the last 2.5 hours up 7.5. So if we scroll back in time, And then, so we are now April 9 noon. So you can look at the date here.
Yep. Top left.
Let's go to. So this is April 8th. This is the end of yesterday.
Okay.
Tech was inside the weakening quadrant. Then we opened today, and then tech is sort of leveling off.
Right.
You start to pick up. This is not when the announcement was there. The market was kind of, moving sideways.
This is earlier.
You pick it up, and this is, when it rotates into that 0 to 90 degree angle, that's where we see the biggest moves.
Okay.
Again, you've got to be very careful because this is a 30-minute chart, so that is like
pretty narrow time.
Yeah, you got to compare it with looking at an uptrend on a 30-minute chart,
Right.
which is happening within a downtrend on a weekly chart. That's kind of the magnitude that we're talking about. But it's interesting to see that before, this is all before that announcement came in, tech was on that positive heading, and then all of a sudden you start to rally and you shoot off into that leading quadrant. And now for the last hour, we started sort of leveling off on momentum.
Right.
So bring it back to the analysis of that daily chart with the gap being filled, gap filled, rolling over, maybe towards the close of today, hit that double bottom that we saw on that chart.
Right.
So that is how I try to sort of combine all that. Look at the RRG for the big picture. On days like this, I love to look at the intraday stuff because it's more meaningful.
Yeah.
For stocks, most of the time, intraday RRGs are kind of interesting, but the moves are too small to really materialize. But on days like this, hey, look at this, 2.5 hours, 8%. Hey, that makes total sense, right?
Huge move.
So tools of the trade, the RRG, but never on its own, always in combination with the other tools that we have on stock charts, market carpets, price charts, candles, indicators. I looked at the RSI, the MACD, divergences, all of that.
Right. I mean, especially in this type of market, right, where we have people trying to figure out what to do with capital. We've got capital moving in tons of different directions. This is when we see rotation. And so a tool like this that's helping you visualize that rotation, whether it's between sectors or between asset classes, is absolutely crucial. I think that's fantastic. I love that you're bringing up multi-time frame stuff too. Not just looking at things on a really short-term basis, but stepping back, looking at those longer-term charts, looking at longer-term RRGs down into shorter-term RRGs. I think that's fantastic. For me, I think that's kind of what I'm using to navigate this market is moving between those different time frames, stepping back to the weekly chart, giving yourself that longer-term context, but then zooming down to daily charts and even to some of these tactical timing charts that I was talking about earlier. That would be kind of one of the tools that I want to highlight as something I've been using to navigate this market. These tactical market timing charts have been very, very helpful. They're not so narrow that you're getting minute-to-minute kind of price action, but breaking the market down into these 30-minute sessions, just like you're doing here on the RRG, it's a helpful way to visualize things. And when you plot that daily, 5-day moving average on top of it, this is a really, really interesting lens to look at the market. We're seeing these huge, huge swings intraday, within the sessions, not just from day to day, but within each of these individual sessions, we're seeing huge swings. You can see that on some of these tactical timing charts. So this list has been very, very helpful to run through this really quickly because we actually have this in a shareable format. For anyone watching, we're going to put a link down in the description below. You can actually get these charts in your own StockCharts account. This is the shared list that we're going to give you guys. So you can actually look for this green button here in the top right corner. Give that a click if you're a StockCharts member, which you should be. And you can actually save this list to your own account. But what we're looking at are the same chart, so 30-minute charts, again, with that 5-day moving average, kind of that tactical timing view. We're doing this for the total market. This is VTI, one of the largest ETFs out there, tracks the entire US stock market. We're doing this for the S&P 100 index, that's mega caps, the 500, that's large caps, the S&P 400, mid caps, the S&P 600, small caps, and then a couple of others. So the NASDAQ 100 in here, we've got the Qs. We've also got the Russell 1000, that's kind of large and mid cap together. Small caps again with the Russell 2000, and then we've got the Dow Industrials as well, the Dow 30. So to go through all of these charts and sort of really understand what's happening on a very narrow time frame across these major indexes, this tool has been incredibly helpful for me to navigate this market. Really gives you a great sense of what we're seeing with some of the intraday price action. So we are going to get these charts into your hands. Again, this is going to be down in the description below. We've got a link to this list. It's going to look exactly like this. You're going to get a link to this page with all of these charts. You can actually save them into your own account. So wanted to bring that up. The other thing that's actually been helping me navigate this market is something that we're not going to show off. I don't want to give it away quite yet, but we've got a very exciting new tool coming out this week. We've got a brand new market summary page, which is a very comprehensive dashboard, drilling into not just what the major averages are doing, but also drilling into things like breadth, like sentiment, key ratios, different factors that you can spin the market by, like growth, value, momentum, different things like that. Also drills into sectors and industries and other asset classes like bonds, commodities, and currencies. So that page is coming out this week. Again, a big, comprehensive dashboard. A lot of these charts that we've been talking about are actually featured on that page and linked on that page. So you're going to get that in your hands later this week. I've had a chance, though, to be using that page for the last couple of weeks as we've been wrapping up our testing and things with the team. And it has been a real kind of almost a godsend, I think, in this market. It's been helping me make sense of everything that's happening because it's putting those things like those breadth numbers right there on kind of one dashboard, one page that you can see. So keep an eye out for that. That's going to be a big announcement coming out this week, but that's definitely one of the other tools that I've been using to navigate this market. So lots of things happening. This one is keeping us on our toes. That's for sure.
Yeah.
Any final thoughts? Any last little bit of wisdom that you want to leave us with?
I don't know. Well, words of wisdom is I've always learned to not take myself too seriously. I mean, we're trying to navigate these markets.
Yeah.
We're trying to make sense of what's thrown at us, and there is just not. There's no holy grail. The ultimate tool just does not exist.
No.
So don't worry if it doesn't work out sometimes. As long as you stay on the right side of the market, allow yourself to be wrong, but make sure that you correct yourself. I think that is probably one of the most important lessons to learn for investors. And yeah, that's it. Just look at it from. Sometimes, if the markets go haywire, just step back and look at it. And I'm not sure if we can get a close-up of this shirt, but this is our new swag, and I love that thing. It's the logo, and it says, "Keep calm and chart on." And that is pretty much exactly what you need to do.
Yeah,
so
that is it.
There you go.
No, you stole the words out of my mouth because I've been looking at your sweatshirt this entire time across the desk, and I was going to say, that's it. That's the wisdom to leave off on, is keep calm and chart on. There's so many different things to distract you out there in the markets, so many different things to concern you, but there's always bright spots in any market. There's pain points, there's bright spots. That's why we're talking about these conversations today. But the key is to keep calm and chart on. Keep up with the process, keep up with the sort of framework, the lens that you're looking at the markets through.
Yes.
Use these tools like RRGs, like some of these tactical timing charts, like this new market summary page that's going to be coming out. Use those tools and don't just bury your head in the sand and hope for it to go away. Stay vigilant, stay diligent with your process, your routines, all of that, and keep calm and chart on.
Absolutely.
That's the way to get through it. Julius, I want to thank you so much for being here across half the globe. It's crazy. Joining us here in Redmond, Washington, in the StockCharts studio. It has been a thrill to be with my good friend Julius de Kempenaer. Again, my name is Grayson Roze, Chief Strategist here at StockCharts.com. If you guys liked this video, definitely give it a like down below. We had a lot of fun here in the studio recording today. So hopefully you had fun watching. Give this video a like. Remember to subscribe for more great content here on our StockCharts TV YouTube channel. We are going to be back with more great stuff very, very soon. But until then, keep calm and chart on, my friends.